Hi, how you doing? This is Stu Simone with Rock Real Estate. And today we'll try to answer the big question in real estate for 2022. Have property prices peaked? Whether you're a professional real estate investor or just a casual observer dreaming of someday nabbing that dream home, just about everyone has noticed that housing prices have skyrocketed since the COVID pandemic hit. Now, housing market slump looked all but assured in 2020 as strict state-issued lockdowns pushed the U.S. unemployment rate to its highest level since the Great Depression, and many states banned in-person home showings. However, prices certainly did not slump. In fact, the opposite happened. Although very few saw it coming, in retrospect, it really shouldn't be surprising. What happened was a vicious circle was started that created a home price elevator to the top. It all started with a lockdown and accompanying panic. People were scared to leave their homes, and they certainly weren't about to let hordes of strangers come into their home, masks, gloves, booties, or not. So folks that normally would have moved stayed put. That caused the housing inventory to shrink dramatically. You know the laws of economics, it's supply and demand. When supply drops or demand rises, prices rise. It's 3 years now after the scary part of the pandemic has passed, and people are moving about freely and unmasked.
Yes!
But we still have a low housing inventory. Why? Because with such a low supply, people who are normally would have moved are staying put, because while they know they can sell their home quickly, they're afraid they won't be able to find their next home and they'll end up living in a hotel room somewhere. While there are realtors and lenders, like me, who have come up with solutions to this concern, perception is reality, and the supply has stayed low, mainly because so many are hunkering down. Now, what about demand? On the one hand, interest rates have risen by a large percentage, and that has turned off many potential buyers. But on the other hand, demand overall has not fallen, and the reasons may surprise you. Millennials who used to be the enemy of real estate as they have historically preferred to rent, are suddenly the largest purchasers, comprising 43% of buyers in today's market, according to the experts. The decision millennials have collectively made to turn away from rental properties and own real estate has increased demand, which increases prices. And another thing, how about that stock market? Did you know that stocks have lost 20% on average this year? For example, sure thing up-and-comer Netflix went down from $7.10 to $120 a share, with other techie stocks crashing as well. And the odd thing is that while bonds normally go up when stocks go down, they are also going down this time for some reason. That means that seniors with so much of their retirement funds and 60-40 mutual funds with bonds, they've just lost 20% of their nest eggs, so they're not about to take any chances moving. So in this way, the stock market is keeping the supply low, but it's also increasing demand, as many are bailing out of the chaotic and unpredictable stock market and shifting their investments to real estate. Not just individual investors like you and I, but billion-dollar investing groups like Blackstone and Black Star Investments. So prices have been going up, and up, until now they have reached all-time highs. But we all know this can't last forever, can it? I mean, what goes up must come down, right? So the big question on everyone's mind right now is, have prices reached their peak? Well, the easy answer is yes, but hold up. I mean, if you asked people last year if prices were at their peak, many would have said yes. And then prices rose another 20% since then. Well, so maybe we should see what the experts have to say. Let's start with the national scene. Moody's Analytics chief economist Mark Zandi told Fortune magazine in June that the housing market has peaked. Everything points to a rolling over of the housing market. Home price growth will go flat here pretty quickly, and we will see home price declines in a significant number of markets. Now remember that word, markets. Moody's says that 96% of the nation's largest 392 housing markets have home prices that are overvalued relative to what local incomes can support, and 149 markets are overvalued by at least 25%. Over the coming 12 months, Moody's expects year-over-year home price growth overall to be 0%. If that comes true, it would mark the worst 12-month stretch since 2012. And it would also be whiplash for realtors, buy-hold investors, and potential sellers who watch property prices soar 19.8% over just the past year. Moody's Zandy believes that we're set to enter a period where both growth and inflation outpace home growth. For home shoppers who've been priced out by the pandemic's housing price boom, which saw U.S. home prices soar 34.4% since February of 2020, that sounds a lot like a peak. But hold up, this is the national scene. So let's look at this map of the areas that are most likely to see prices drop. While Southern California may not be white, but it's also not one of the highlighted colors either, so maybe it's not so overvalued. Now, if you watched my video on inflation and real estate, you may remember that when inflation strikes, the government has no choice but to raise interest rates, and they plan to do so at least 4 times this year. So sure enough, the California housing market started showing signs of a market shift with a rise in interest rates in April and May, and it's continued to downshift in June and July. June sales volume in California fell by 8.4% from May and is down 20.9% from a year ago, a stat that makes realtors want to cry. Although California's median price in June was 5.4% higher than the previous Junes, the median home price declined 4.0% in June from the revised record high of $900,170 recorded in May of 2022, according to California Association of Realtors. Even more striking, the percentage of $1 million plus house sales fell a whopping 8.3% from the previous month. Well, that makes sense. With interest rates rising, buyers in every price range had a look at lower priced homes, and there was no one from the highest level to pick up the slack on the high end. CAR's latest weekly housing data for the week ending July 18, 2022 brings some long-awaited good news to current and prospective buyers. Yeah! After more than 2 years of reductions in the number of active listings for sale, housing inventory has been growing since May. In fact, there were more active listings on the market in June of 2022 than at any time over the previous 2 years. For the week of June 10th, there were over 48,000 active listings in California, the most since shortly after the pandemic began. Yes, listings remain down relative to historical norms, but it's good for buyers to see an upward trend this year. And last week, the amount of homes that sold for more than the asking price dipped to 46%. Still historically high, but again, a trend in favor of buyers. As a result, more sellers are willing to decrease their asking price, with 37% of current listings reduced from the initial list price last week in California. That's another 2+ year high. California Association of Realtors President Otto Katrina states California's housing market continues to moderate from the frenzied levels seen in the past 2 years, which is creating favorable conditions for buyers who lost offers or sat out during the fiercely competitive market. Prospective buyers now have the rare opportunity to see more listings coming onto the market and face less competition. Now, zeroing in on Southern California, the Los Angeles Times just reported that the region's 6-county medium-sized sales price in June 22 was $750,000, down $10,000 from May, but still much higher than last June when the median price was only $679,000. Redfin data indicates that 29.6% of all homes on the market in the Los Angeles metro area had price cuts in June of 22, more than double the 12.6% rate of June of 2021. Comparing the 6 counties, Los Angeles County's median price did not change from May to June, while Orange and San Diego counties dipped the most at 2.8 and 2.9% respectively. Finally, the number of SoCal home sales only dipped slightly from May, but plunged compared with a year earlier, according to DQ News. A total of 20,289 SoCal homes were sold in June, a decline of 25.3% from the previous June. That's 5% more than the state as a whole. All put together, the data shows that the housing market has indeed slowed since mortgage rates jumped in the spring from the low 3% range to the high 5% range where they are now. Now, I know the data can be confusing. Active listings are up, realtors are happy. Home sales are down, realtors and sellers are sad. So how do we reconcile this? It's DOM, or days on the market. The DOM is up, so it's taken longer to sell property now than just a few months ago. But again, not overly long by historical standards. In fact, a little bit on the short side. So to answer the original question, will the housing market peak in 2022? Did it just peak in May? Did the housing market just peak in June? Well, Vincent Chan, CEO of real estate development and investment firm Christina, maintains that the housing market never peaks. It only warms and cools and sometimes booms over time, alternating between a buyer's and a seller's market. But it always keeps going up. Think about a hiking trail going up a mountain. Sometimes it gets steeper, sometimes it dips back down, but it always keeps climbing. Well, thanks a lot, Mr. Chan. You just ruined my question. Well, so let's change the question to, is 2022 good for buyers? For sellers? I mean, that's what we want to know, right? Well, whether you're looking to buy or sell, the key words are timing and local. Knowledge of economic trends in your local market is as important as it's ever been. For sellers in the California housing market, it's still a good time to sell for sure. Sure, you may not get 10 offers in the first day of your listing like 2021, but times are still good as prices are still near record highs. But with an increase in inventory prices and interest rates leveling off and some buyers pausing their searches, right now could be a good time for buyers as well. If you're a buyer, just make sure to get pre-approved, not pre-qualified, so you'll be ready to jump when a sweet deal pops up. Contact me, and not only will I give you the scoop on your local market, I will make sure that you have the absolute best chance to make your offer the one that is accepted with a PYT pre-approval that comes with a $15,000 guarantee. Even better, my lender will buy the house in cash for you and then assign it to you during escrow if that's what it takes to secure your dream home. Yes, these are uncertain times, but Rock Real Estate continues to provide a wealth of information right here and solutions. Where there's a will, there is a way. In short, whether you're selling or buying, in this market, it really pays to know your stuff. Or hire somebody that does. Well, thanks for watching. I appreciate it. Subscribe, click, like, and watch the next video right here on Stu Simone's Rock Real Estate.